Well, Nigeria has suspended gasoline import licenses for a second month in a row as regulators begin enforcing a law allowing imports only when domestic supply falls short. This comes as surging oil prices triggered by the war in Iran ripple across African economies, threatening higher fuel costs, rising inflation, and renewed pressure on currencies. Data from the Nigerian Midstream and Downstream Petroleum Regulatory Authority shows that no import licenses for gasoline were issued in February or so far in March, signaling a shift towards prioritizing local output. In fact, major oil marketers have had their import licenses revoked. It further reveals that nearly all gasoline supplied in Nigeria came from Dangote refinery, the largest in Africa. And under the new policy, gasoline imports permits will only be issued when local production cannot meet demand, which isn't currently the case.
We'd go back a week and it was hovering in a stable range of the mid-60s. It's now 118. If you look at freight rates, it would cost us about $800,000 a day to bring crude on a tanker from a Nigerian terminal to our refinery. That's currently $3.5 million.
The development marks a turning point in a battle billionaire Aliko Dangote had previously taken to court, who has long argued fuel imports are no longer necessary, stressing that such approvals violated regulations and undermined Nigeria's growing local refining capacity. The Dangote Group recently signed 2 agreements worth $750 million with China and India to expand its refinery and petrochemical operations. Once completed, the investment is expected to boost the refinery's capacity to about 1.4 million barrels per day. For more on this, our correspondent Louisa has sent us this report from Lagos. Take a look.
In a committed move to protect domestic refining of petroleum products, Nigeria has suspended the issuance of gasoline import licenses for a second straight month despite price surge by more than 54% since the US and Israel began strikes on Iran. This is in line with the Petroleum Industry Act that only allow imports when the African country's domestic supply falls short. Now, while this aims to reduce Nigeria's historic reliance on imported fuel, questions remain about whether local output can fully meet demand without disruptions. For now, regulators insist imports will only resume if domestic supply falls short. We recall the Dangote refinery last year sued the regulator and the state oil company to force a halt to imports. From Lagos, Nigeria, Louisa Olaniyi, WION World is One.